everybody, what's up? It is Tuesday, April 13th. All right, we had a little bit of a scare this morning when the government said it was going to halt the Johnson & Johnson vaccine because of some issues that have arisen, blood clots, several people, I think one woman maybe died. So you had your classic headline trading sell-off early in the morning. I sent out an email to my subscribers saying you got to buy that dip. Look, you cannot let, I'm not trying to downplay the Johnson & Johnson. Well, I am actually. I mean, millions of people have been vaccinated. I think we're talking about 6 individuals out of millions. And the FDA said it's going to be a temporary suspension and the vaccine will be available again. I had the Moderna. I'm fine. No issues with that. As I said, I had my second shot yesterday. I'm fully vaccinated. Number one. What I was going to say is you can't fight the fiscal. The fiscal support, is what I've been talking about for so long. It is, record levels, and it's enough to sustain the market rally. We're going to see, I think, very strong corporate earnings when you consider the fact that 40 to 50% of government spending flows to corporate earnings, and we've had a massive increase. I think the banks start tomorrow. Actually, they're going to start reporting tomorrow. We'll see what happens there. So this rally, and again, I said this yesterday, while the sentiment is bullish, it can go to higher levels, and sentiment by itself is not necessarily a good timing indicator. So the market is very bullish. We had a big run up in the NASDAQ stocks, back in February and March when they were really selling off hard. I was telling you on these videos, NASDAQ is overdone. The selling in the tech stocks is overdone. It was like a hysterical reaction to rising bond yields. By the way, bond yields fell today. We had a very successful auction, Treasury auction, which is not surprising because when you have so many reserves in the banking system, these auctions are going to come off without a hitch. Remember, the money to buy treasuries comes from government spending itself. The dollars to buy treasuries comes from government spending itself. The sale of treasuries is just a reserve drain. You got to fill up a swimming pool before you can drain it, okay? The money has to be put there first in order for a single treasury to get sold. So, there's never going to be a problem with selling treasuries. The money is there. And as long as treasuries pay an interest rate over cash, people are going to buy them. And anyway, the Treasury auctions to primary dealers whose job it is to buy at the auction. Then it's up to them if they want to flip it to their customers. Maybe they buy on behalf of their customers. I mean, it always makes me laugh when all the angst before an auction, I go, oh my God, is it going to go off? Is it going to be a failed auction? It can never be a failed auction. The money is there first. Again, you got to fill up a swimming pool before you can drain it. Anyway, CPI came out today. Inflation, right? Hyperinflation. They're printing money. They're printing money. Again, I'm seeing all these articles all over the place about hyperinflation. Now, some commodity prices are extremely elevated. Look at lumber. Lumber is at an all-time record high. I mean, it's kind of scary. I'm afraid they're going to chop down all of our forests and our woodlands because prices are so high. And I hate to see that happen. But that, again, is all part of the pandemic and the supply chain disruptions that we have seen. There was an article that I saw, and I sent it out today, that the Port of Los Angeles, somebody who tracks this data, the Port of Los Angeles actually saw the peak in these supply chain difficulties, time lags, whatever you want to call it. I forget how he phrased it. The peak of that was in February, and now it's starting to come down. It's starting to moderate now. So we're already starting to see things open back up a little bit, but it's a slow process. All right? It's not going to happen like I said, it's not like you turn on a switch and everything's back to normal. It's a slow process, a rolling process that unfolds over a period of time, but it's getting better. Again, so much pessimism out there. Hyperinflation, a hyperinflationary depression. I'm seeing somebody write on a stupid post. I mean, this is just ridiculous. You have record fiscal support. It's going to flow to corporate profits. Remember, you can go back. By the way, look at Tesla today. Tesla was up. I took profits today around at 725 and 750. Remember, if you go back to January, I said that my analysis indicated to me that the fair value for Tesla stock based on its production, its delivery of automobiles, its profits, etc., was about 725 to 750 a share. And back, when was it? I think it was March 30th or March 31st. I don't know if I said it on here, but when Tesla fell below 600, I sent out an email to my subscribers saying, you got to buy Tesla below 600. You must buy Tesla below 600. We hit 760 today. So I took profits on that today, and I'm pretty sure, it'll hang around here for a while. Momentum may carry it a little bit higher, but I'm pretty sure we'll see the 600 handle again for a while. We can be in this price range on Tesla for a while. So what I was saying, NASDAQ, you had all this crazy selling back in February and March in the tech stocks based on, bond yields going up. Bond yields are coming down now. Prices are moderating. I think the average price for unleaded gasoline in the United States right now is about anywhere from $2.50 to $2.80 a gallon. That is not hyperinflationary. By no means is that hyperinflationary. And a lot of other commodities have just rebounded back to the level that we saw pre-pandemic, which is natural to me. We're getting back to a normal functioning economy. And again, there are some that are outliers that are now at, multi-year, if not all-time record highs. I mentioned lumber. So, fiscal support, that is the key thing. The only possible, let's call it, thing that I see as a potential problem looking down the road would be the debt ceiling when that comes back into play at the end of July. And politically, we could run into some problems with Congress not raising the debt ceiling. I don't know. That's just something potentially I see out there. Could lead to a government shutdown. It could lead to a slowdown or a curtailment in normal spending patterns by the Treasury. Other than that, we're still in this environment of very powerful fiscal support, and I don't see that going away, and that is the key thing. All right? That's the key thing. Every time you see one of these headline knee-jerk reactions, like today, that's just giving you a buying opportunity. And I still think the contrarian trade is to be a buyer in this market. People are really, really negative. They're talking about bubbles all over the place. They're talking about hyperinflation. By the way, Bitcoin at over 63,000, 63,500. Coinbase is doing its IPO. I'm not sure when that's happening, but now they set a price of $250 a share, but it's trading much higher than that, I guess over the counter or however it trades until it comes out. So that is adding or fueling the enthusiasm, people moving into Bitcoin, etc. And yesterday I talked about that Chinese digital currency. The dollar was weaker today. Okay, you can't draw connections on a day-to-day basis. You know, I say that all the time. Most day-to-day market moves, that's just noise. But pay attention to that. That's a game changer long term. All right, that's it. I did a new podcast today. I'm going to upload it tomorrow. Have a great day, everybody. I'll see you tomorrow. Bye-bye.